it should be. So in last two sessions, we understood about uptrend and then we understood about base. Typically, when you want to trade a stock, it should be in an uptrend. That is the first step. So, for example, this is the overall price movement. It needs to be above the key moving averages, which is your 50 or 150, 200. Okay. That is when you will call a stock is in an uptrend. It's the simplest way to understand whether there is an uptrend or downtrend using the moving averages. Of course, it can also be understood by way of price action, but then it makes it a bit judgmental. So we see it by way of these moving averages. Okay. Second thing, we understood that whenever a stock is moving, so for example, if a stock is moving from 100 rupees to 200 rupees, 300, 160, 240, whatever that price it is, it never moves in 3 days or 4 days or 5 days. Okay, when a stock has to give such a long movement of 100x to 100%, 200%, it will move up, it will set up a base, it will digest up the previous run. So whatever run the stock has made here, it then digests up. Okay, and then stock may resume its journey in the uptrend. Now typically these consolidation periods, okay, these consolidation periods are called as bases. This one, then this one, these are called as bases, or you can simply call this as consolidation also. We understood in the previous session that there are 3 types of bases that you will find up. You will have a upright base, upside down base, and you will have a upslope base based on how it is looking around. Okay. These were the key fundamental points that we understood in 2 sessions. Now we have to understand more on which basis to trade. So it is not like every consolidation, every base which is there in an uptrend, you have to trade. It's not like that. There are certain other parameters that we need to see upon so that the probability to win increases. Okay, then it makes it a predictable business to do again and again over a longer term. So next step is analyzing these bases further. So for that, we have to look up through 4 or 5 further things. Okay. So this is like, you can call it as a category. And why this is important to identify, so that you can mark the correct supply zones. For marking supply zones. Now, further things which needs to be there from a point of view of understanding the basis, breaking it down further, is its structure. We need a good range expansion. Price near highs. We'll understand each point in depth. Growth rates or very high volume. Range expansion with volume. And character of stock. These are typical 5 things. If further there is any more, then I'll add up as we will see through examples and examples. But these are the 5 points which we need to understand more about the basis so as to actually trade upon. So it's not like every consolidation that you will see up there, you have to trade it. Okay. Now let's understand first about structure and why is it important. So when a stock is moving and setting up a base, so this is an up move and then it is setting up a base here, it is moving into a consolidation period. We need it to be in a right structure. It should contract up the volatility when it is trying to consolidate. Okay, it's not like any random consolidation you have to buy. It needs to be in a correct manner so as we can predict up the outcome. Okay, so that the probability of your winning is fine and you can replicate that again and again to all the stocks around there. So you need a higher low up here when it is consolidating. So when a stock is moving, it typically when it falls, it goes like this. At some moment, it will start moving like this. Higher low typically tells you the overall strength of the ongoing trend. Okay. If it is moving in a higher lows, then your buyers are more in strength. Here, when it is moving in a lower low, sellers are more in strength. Simple reason is whenever the stock is falling up here, whenever the stock is falling up here, it doesn't breaks the previous low up here. When it is moving in a downside, when it is a lower low, it typically breaks up the previous low. And then it can keep on continuing doing so, and it can eventually move to stage 3. Okay, stage 4. It can eventually move to a stage in a downtrending stage. We don't want it. We want it to consolidate, to make a higher low, and to move forward. That's what the overall thinking is of buying a stock in an uptrend, that it should consolidate in a correct manner. And when there is an increase in volatility, a range expansion, that is where you can anticipate that the stock can move ahead. So stock typically moves lower low in this fall, and then at some moment it will find a support, it will start moving up. Now here, the buyers are not letting the stock to break up this previous low up here. Again, when some profit booking came, when it was trying to move up here, profit booking came, but the buyers were supporting that fall. They were not letting it to go below this. So that is telling you an inherent strength in the overall chart. Okay. Sometimes stock can do like this. It can simply be a lower low, and directly move up like this. Okay, a big candle, let's say 20% candle directly came from bottom. Sometimes it can be like this, and then it can move up here if there is an upside down base. Okay, so those kind of structures are not correct structures. Okay, these are sudden jerks, sudden movements, and when we see such sudden movement, it can be volatile going ahead, and you cannot simply predict the outcome, that what can happen next. But when it falls in a correct manner, it gives you a good understanding. Let's see some examples more to understand it better. This is one recent one. So this is the fall up here. And you can see it made a low, then tried to move up, again fall. It's a lower low. This time when it was falling, it did not break this low. Again, it did not break this low. Here again, it had a single day, some kind of shakeout. Again here, almost the same level. Here, a comparative higher low again. Here a higher low. Here again a higher low. This here a higher low. So it's a way of moving of stock. Okay, whenever in an uptrend the stock will move, it will move up. Here it can consolidate again. At some moment it will catch up its higher low and then move ahead. Here again like this, then it can go like this and move ahead. Let's see more and more examples. Let's see in which we have multiple ups and downs. So this is first of all a visual thing that you can see. Secondly, you can use moving averages for identifying up the lows. And the third part is the automation, the AI tool which have been developed, which automatically gives you, analyzes the chart and gives you whether it's a higher low or it's a lower low. See up here, you can see up this complete move. Here it went in a lower low. Here a higher low, then it's just simply moving up here, a higher low. Here it went to lower lows. There again, at some moment, see this was continuously falling and falling. At some moment it catches up its structure. It tried to move up, failed. Then again this one broke up this low. It tried to move up for 1-2 candles, again a low. Look up this one. This is best example of consolidation going on and then how it picks up the correct structure. So see up here. Let's analyze from here. Here it tried to move up a bit, again went down. Here just down, continuous downtrend. It's a continuous downtrend. It made a higher low somewhere here and then again broke out this low after 1-2 candles, lower low. Okay, here lower low. Here this lower low converted to higher low, higher lows again up here, higher lows again up here. So this is what will happen when a stock in a consolidation, okay, it's consolidating, it's just moving down. At some moment it will start moving higher lows. And that is where you get interested. You need that to happen first before trading any breakout. You need that to happen up so that it's not a random. It has digested the run in a correct manner. It is showing you some strength that now the buyers are back in strength. Okay, now identifying this is in one more way is use of EMAs. Don't worry, we'll do a lot of examples. We have just started. Okay. So this is 10 EMA. Typically, you can use that also for identifying up the lower lows. Typically, whenever stock goes below 10 and then moves up. So this is here it tried 1 day, 2 day, at least 3-4 days. If it moves back up, then you can call the lowest point as a low. Minimum 3-4 days, so that you have at least some trying on the upside. Okay, so this is a move up here, just falling here. You had 1, 2, 3 sessions of move. So this can be called as a low. Then here again you have 1, 2, 3, 4 sessions up. So on this day you will come to know whether it was a lower low or not. When it tries to move back up above 10 EMA, here you can say it's a higher low now. This is your lowest point. This was last lowest point. So you simply compare up those points. Okay. Here then it's a lower low. You can see on this day itself. Here, when this moves up, you can then call that this was the lowest point in this fall. Okay. Whenever it closes above the 10 EMA, the lowest point is a low. This one. You compare it to the previous one and it's a low. Here you can see up here 2-3 candles. So this is a low. Again it fell down here. It moved up here. So this is a low point. Compared to this, it's a higher low. Now look up how well it contracted up here. It was moving up and down too much. Here volatility started contracting. So this was like this. Then it went like this. Okay. here it started contracting. So it started contracting. Now this is a higher low. This is almost at the same point, so it's fine. Same lows. Once it has transitioned into higher low, after that same points are also fine. Okay, the structure has changed. That's what you know up here, that the structure is still right. It is maintaining that structure, and after that you had a good breakout to play upon. Now this can be a bit judgment based, in which it can create a confusion. Let's first see more through this manual and then we'll move to the AI based. So look up this stock. This is a base. Okay, this is an uptrend. This is a base up here. The kind of upright base. Here there are very less, 10-11 candles only. So you cannot change this supply from here to here. This is a supply zone. Now this is one low. It tried to move 2-3 days. After that, here is another low. As it moves up here, you can call this a low. On this day only, you will know the lowest point. Okay, you cannot know the low up here. You don't know the next candles, right? So whenever it moves up, so here you can call this one as low. So it has moved up. Only after that you will come to know which was the lowest point. Okay, then here again it tried to move up a bit, but here it gave one day close but did not work. Okay, it's a continuous downtrend, you can call. Here this is then the next part. So not a very good structure. It's not a very good structure, not a very good higher lows. It's kind of, here it was lower low, here it is a kind of same lows, and it directly broke out here from the bottom. From a lower low it directly broke out, so not much of use. So this is where we needed a good structure. Okay, maybe it goes up like here, it consolidates, gives a pullback here, and then it breaks. That's what you need. That's what a correct structure. A correct structure will contract. Okay, it moves like this, and then it eventually it contracts. That is what we are looking. We're looking for this to happen on the right side. Okay, because first it will go into lower low most of the time, because it's a correction that will come after a run. Okay, it's a good run. If some correction will come, eventually it will change the structure to lower lows. But after that, as it consolidates, as it tries to move ahead, we need this to happen on the other side. That is one important part of which stock to trade. Not every consolidation is tradable. Okay, not every consolidation or base is tradable. We need certain things to happen up to fall in line so as to make a trade up there, and one of it is this contraction. As it consolidate, as it moves further in the consolidation, it needs to contract. Let's see more examples. This is a very good example of how a very neat kind of structure forms. Okay, here simply you can see here it started making a low here one. After that, this was still a higher low. Here it again went down in the overall correction. It becomes a lower low. Now look up how it contracted. This time the fall was there, but it's very up from here. From this point, it's too high from here. That's what you need. You need a good contraction in the volatility, and these higher low helps you identify the contractions, that the contractions are forming in a right way. Okay, so here then again look up here. So change in structure in the complete base. So this was which kind of base? This was which kind of base? Just write down in the chat box. understood three kind of base. Is up down, right? Correct. So majority of the action is on the downside. For once it gave its complete run, almost 56%, it almost gave its full run. So it's up down. Okay. Here this is your supply zone. So inside this base it was a lower low and then it corrected its formation, it changed into higher low, and you have a good move up here. So till the time the base gets matured, you can call it as a base maturity also. It needs to be a mature base. For maturing, it needs to have that kind of structure. Let's see more examples. Banco India, recent one. So this is upslope base here. Now look up here, it then made a lower low at here. It again went down up here, went up. So this is now a higher low conversion up here. Sometimes it can be really very tight, but it went down below 10 up here and then again closed up. So that's a low then. It was just of one day, that is fine. Okay. But it changed its structure here. Okay, in a very quick manner. Okay, in single day itself, it changed its structure and then it progressed ahead. If the stock would have moved like here directly 20%, it's not a very right way. It's not a correct structure. It's absurd. You cannot trade up absurd price actions. Let's see more. How to enter exit? We'll come to that. Okay, I have not taken that part yet. Look up here. Complete up, full down, up and down base here. You have a very deep correction up here. Okay, from this point it completely gave it. Then it started contracting. Okay, as it consolidated, it is starting contracting. A lower low here. Here there's a big wake kind of. This 4th of June was an election kind of thing. So just take its close somewhere near, or simply see other price action apart from this candle. These are like one of days, so just ignore it. And so this is a fine price action still. Once it transitioned to higher low, then almost same, and then it progressed up here. Okay, look up here. This then moved up, went down up here, 2-3 candles up, then again here down. It moved up here. It did not went below 10, but here is another thing which you can see, which our tool also will not take care. You'll have to understand this manually. So sometimes from a higher low, it can happen that it does not go. Like in this case, this is your lower low. It did not moved up here. It tried up here. It did not went below 10 to call it as another low, but it's a very tight action before the breakout. Okay, it's very tight action before the breakout. Okay, before this breakout on this particular candle, it's a very tight action of 2-3 days. Okay, even if it is 2 days, it is fine. It's a very tight action. Okay, this is correcting up this lower low. The stock is coming from a low low, but it's not going directly up. Okay, from this candle, it's not like it went directly like this. It took its time. It took 2, 3, 4 days up here to make a right side. That's what I earlier talked, that it need to make a correct right side. Okay, it need to make a correct right side. One way is to identify it from 10 EMA. Okay, one is to understand it without using the moving average itself. Okay, just by way of visual, and you can like then combine both also. One is 10 EMA way, one is just a visual way, and you can combine both of them also. Here from 10 EMA it's down, but if you'll see visually, it is correcting up that thing. It's correcting up these lower lows in a very fast and quick manner in just matter of 2-3 days. It's not breaking directly. It made a right side and then it's breaking out. Okay, so this is also correct structure. This is also correct structure then. It spent time before breaking out. Okay, it did not directly broke out. If it's a direct breakout, for example, you have just a candle up, this candle itself went like here, then it's a bad breakout. Okay, it's not a tradable thing, it's not a right thing. Related, then go below 10 and form a real lower low. Okay, real higher low. Sorry. So we don't want to trade such price action where it's just simply going down and it moves up directly. We need to spend it some right side in form of contractions. Okay. So just keep this in mind. Yukta says on previous session you have told to see the stock going. I never discussed about any higher low in previous sessions. Okay. I don't know what you got from it. We are discussing here only just higher lows. I never discussed that previously. You can go through the previous session again. We discussed about only bases. How do bases look generally, how it forms, what are the types of it, and typically bases go below 20 when they are in the making. When there is a consolidation, stock will correct, okay, and then it will go below 10, below 20, then again cover it up and move up. Okay, and in that formation of that base, you will then have to see higher lows. Okay, so just one time going through everything may not help. We'll have to go through 2-3 times. Okay, or at least if not then make notes, switch off your mobile phone notifications. If you are diverted here and there, then it may not help. It may create confusion, and then I'm trying to teach something, you will take something else, and then afterwards it then creates problem and you'll come back, it's not working, it's this, it's that. So just take care of that or revise again. In some way you have to revise. Okay. Now look up here, this fall here, this is lower low. Then here, as you are in this base, okay, as you are setting up this base, okay, you are seeing volatility contract up here. Now here it expanded instead. This was a good contraction happening, a good higher low that's in place. It just suddenly expanded and directly broke out. So then this is not a very good action that we are looking for. That it goes down and then it makes a lower low and then simply breaks out. Then you need some kind of again a higher low. So here it again made a higher low, went below the moving averages and then moved up. So that this is a correction of this wrong lower low. Okay, this is a lower low. So lower low can eventually get corrected. Either it can get corrected instantly by way of a very tight right side before breaking out, or after breaking out it can make another low, higher low. Okay, in this way lower lows can get corrected. Either it moves up, breaks out directly and then gives you this kind, then you can call it as that it's a good structure, or it directly, if this would have spent 1-2 more days here and then broke out, then this was also a fine correction of the overall structure. Okay. Now look up this one. Here low, here again. You can see the strength in the structure converting. Here this lower low, here a bit higher, here more higher, and eventually it breaks out. It's a good good structure and breaks. Here also it is good. It spent some days here. Can shift this to here because this is good time spending up here. This was also good, but it did not work. Okay. And then it again gave a break, and this time it gave good money. So we'll understand how to enter. It's not like on the breakout itself you have to enter. There are tactics around it. But let's first understand which one to trade. Okay, before entry, you need to know where to take the entries. So that's why we are understanding all these things. And look up this. This is a very good kind of base. Here it turned kind of 2-3 days. Here see how on the right side then it went good. It was this right side went good in the base and then it broke. The up down base, this correct here and then broke out. If it is a direct breakout from here, let's say this candle is very big, so that's not a good. Then you need an higher low to form again. Or if this spent like 2-3 days it had spent up here and then it breaks, then it would have been fine. Okay, here it corrects the structure. It's a higher low here, and once it makes that, after that it's a good break and movement up. Look up here. This is a lower low up here. Okay, it went up 1, 2, 3 sessions up here on the 10 EMA. Then it went down again. Here it went 2, 3 sessions up, so that's a low. So you will compare this to this, and then it goes sideways. It did not broke out up here. Again a good higher low, and then it's a break. It did not work. Instantly reversed, and then this one again it broke out up here and it worked up here. Okay. You can see this again structure. Clean lower low structure. Okay, one low was here also. So this higher low here, then it failed. Lower low, lower low. Eventually then after this lower low it corrected. Spending time some here, it corrected also, went below 10 EMA up on the upper side here. Here again on the upper side. So that's a correction. That's what you're looking for. Okay. The structure aligned and then it's a breakout after that. Look up this one, this base. Good structure. Okay. Here this is a lower low kind of movement. This is again election one, so still at a similar kind of point. Here it was a good higher low. This higher low is typically is like a contraction. Okay, that it's a volatility contraction that eventually happens when it moves in a right way. That's what we are looking. So volatility here, there's too much volatility. Here the volatility reduced. Okay. Here the volatility, let's say from this close itself 10-11%, here 6%. Okay. Here you have a good 18-19%. Here it then made another low 12%. So higher low is volatility contraction in itself. Okay. The volume does not play any role in the structure. Structure is just defined by the price. Volume will play a role in your entry. Okay. When you are entering, we'll understand in the second point, which is range expansion. Okay. This is structure. When you are observing any structure, only price matters. Okay. Volume does not matter. That volume will matter in further analysis when we'll go to the second point of range expansion. Let's see some more examples. So this is, look at this. This is good contraction happening up here. Eventually it did not broke out, but it was a good contraction here, then here. Okay. If it broke, if it would have given a good breakout up here, then it would have been good play. Okay, but it did not give a breakout. It tried to move up, few minutes, went completely back, but the structure was good. Now see, the structure has changed again. This is a lower low up here. Maybe in future it sets up again some higher low, and again we can make a up down kind of base up here. It moves like this, and then maybe, we don't know. If it doesn't, it doesn't. Look up here, these continuous sets of lows and lows, just moving up, giving back, moving up, giving back, moving up, giving back, till here. Look, all the time it happened the same. It moved up 1-2 days, went down, moved up 1-2-3 days, went down here fully. This, not this one, this one. Okay, it here again keep on continuing falling down and down. At some point that will change its structure, and here you can make a supply zone. Okay, and you have a change in structure up here. So that's what you are expecting in any base. Okay, we are expecting that on the right side it changes its structure. Okay, right side should be contraction than the left side. Okay, you would have heard about volatility contraction, VCP. This is the same, a way to identify it. Okay, a further refinement of it. When it makes a higher low, it's contracting in itself. Let's see more examples. Look up this one. Consistent basis, down, down. Here tried to make up a higher low. Would have supply zone here. It did not broke. Instead it took a rejection. Again went down. Again a lower low. Again a lower low. Here it again started higher lows. Simply using this 10 EMA you can do, or a visual thing, whichever is convenient. Okay, you can see that it moved up 10 EMA, 3 sessions, 4 sessions, it went down fully. Here it again moved up, so you can call this as a low. Now you compare this to this previous one. Okay, now again it went below here, this candle. Okay, now after this candle, this is where it again moved up. So then this point is the low. The lowest price is your low, this one. This is a low point. And you can compare this low to the previous one. Okay, it's higher, of course. This 209, 210, this is 252. So it's higher. It's a volatility. Volatility has been contracted up here. This was too much volatility. This is now very less volatility. So when it is forming higher low, it will eventually, it contracts. Here it did one kind of shakeout up here. It's again a higher low up here, and it then moved. If this would have been a lower low, like this one, then again you will see, you will wait for some right side or very tight action before the breakout. See, this is a very recent example. Tata investment. So it contracted up here. Okay, this, but it failed up here. This is a lower low now, right? But this is your breakout zone, kind of up and down base. Here up and majority action up here. Okay, this is fine. 1 day, 2 day. We understood supply zone is where you identify where the majority of price action is. It's on the bottom side. It's an up and down kind of base. Majority of your run is gone for once. So here majority price action going up here. This is your majority rejection area. Now from this low, it did not directly broke out like here. Okay, it's not like this. If it's like this, then it's a bad price action. You will want then in future, once it corrects up that up, and then you can trade upon it. Here you can see that it spent some time, 2-3 days near to this resistance zone. That's a correction of this lower low. It's a lower low, but it got corrected in a very tight manner up here. Then it breaks out. So that's a correct way. Okay, that's a correct way of moving an ideal stock. An ideal stock should move like this. Okay, it should not be a lower low, it should be a higher low. Okay, even if it's a lower low, then it should give very tight right side. Like we understood that the right side should be tight. It should contract. Okay, it should make a higher low. So very tight price action, it then break out and it move like this. Okay, let's see more examples. Look up this one. You will see how this base here, and then it started contracting. So this is 20 to 23%. Then it again started contracting, 8-10%, here 8-9-10%, here again see 6-7%. Okay, so whenever it will move in a higher low formation, it will start contracting. Right, this is exactly what we understood up here. Okay, that stock will be like this, then at some point it will go like this, and then it breaks out. Okay, look up this one. Now look here, it went directly from the low and given a breakout. This one. That's not a right price action. Nothing needs to be done up here then. It was a lower low up here. We will compare this to compare this low to this low. This is a lower low and it directly given a breakout. Now it's of no use. If it would have spent some time here itself before breaking out, not after, before. Not once it has done the thing, not after that, before these level, like we have seen in Tata investment. Here then it finally went below 10 and made a higher low. Then this is a correction for this case. This is the correction of the structure and then it's fine. It again went 10, below 10, again a higher low, fine. This is how structure of a stock will look. So in Tata investment, I told you have to look supply zone, how the supply zones are made, where you have majority price action. Okay. Where you are seeing a majority price action, that is your supply zone. And you have to see which kind of base it is. Which kind of base is this? Is this an upright base? Is this looking like this? Is this looking like this? No, right? It's going here. So majority price action will be here in an up-down base. Even if you don't understand, remember the name upright or up-down, your understanding is fine, it will work. Where the majority price action is, it's here, not here. It is okay, it's one off. It's only one day. Okay, majority is here. Okay, it's an up-down base. Up-down base usually gives up its entire run. Here you had this, it gave up fully its run. Here is where majority of the people are choked upon. Okay, majority people are here before these levels. So that is why this is your supply zone. Okay, and before this supply zone, you have this correction of the lower lows. Okay. Now look up this one here. This is lower low. Okay. Here it again went down, lower low. Here the structure started correcting fine from this lower low to a higher low. Actually here also this candle went down, a higher low, and it then eventually picked up. Okay. Here look up this. Now in this also, this is a lower low, but you can see that it spent some time near to here. Okay, near to this 3-4 tight candles it gave. So it's a lower low here, spent some time here on the right side before breaking out. Look up this one. This is here above 10, here below 10, 10, 10, this. Okay, we will compare this to this then. It's a higher low. Here again it went down. It's a higher low. Okay. Now coming back, this is how we can do it manually. How to check up higher lows, I'll again repeat it. It is visual. Visually also you can do help of 10 EMA also you can do. Okay. Lower low, if it's there, it can get corrected by way of tight action before breakout. Okay. Or in future, it may set up, it may go below 10 and it may again visually make up a higher low. Now, these things have been now automated. We'll talk about it now to conclude up the structure. Manually, this is the logic which we understood through 15, 16 kind of examples. And we have also automated it now, and it takes care of few other things. It takes care, it looks up visually, then it looks up with help of EMAs 10, 12, 15, and then it in itself it decides upon that whether it's a higher low or it's not. Okay. Here also, if it's a lower low, you have to see this part manually. If before breaking out, if it's a tight action, let's see Tata investment and let's apply this. How to get access of this, everything. I have not talked anything about it yet. How to get access to the indicator. I will talk when the time will come. Till then, just understand the usage. Okay, let's rub this, erase this. Let's go on this particular day. Okay, so it gives you higher low automatically. You don't have to do up anything. So this was a higher low, as we understood from this here to here, higher low. This is a lower low. This is the recent one. This is your most important. Okay, the what's going on in the latest one. This is a higher low. It's saying no. Okay, it's red. So the structure is not fine up till here. But here you can see that before this breaking out, it has made a tight price action. So that is then correcting up. Okay. So it's a correction of that. And then it simply moves ahead. Okay. Let's see this IRFC examples that we discussed previously. You can see up here higher low. Okay, this is correct one. Let me go to those days. Let's say you are on this particular day. Let's say you are on this particular day. So it gives you this is a higher low. Okay, it automatically do all the calculation by itself. Okay, by way of visual looking at the chart, understanding it, by way of EMAs, and eventually it also gives feedback over the period. That's why it's an AI structural analysis. Okay, because it gives me, okay, it will not give you the analysis and the report, but it gives me, okay, on the back end. and for improvements. So this is a higher low in itself. It's telling you that. And it also marks the recent one. Let's say you are on this particular day. It gives you that these are the higher lows. This is the recent one. What's going on recently? It's a higher low. Okay. Let's see. If you are here, let's see how it goes. On this day, it may not give anything. Okay, it's just taking recently. Let it move above 10, because after that only it will come to know which is the lowest one. So this is still higher low. It is comparing up from here. Okay. Re of this second last, this is an anticipatory. It went one day, so it anticipated, but then it eventually did not work. What's useful is the recent one. Okay, because here you can see it went one day. So on that day, it tried to anticipate that this may be the low, but then it eventually followed. Okay, so then it, in its calculation, like I said, that it automatically understands that we don't have to do it. It automatically understood that it tried, but it did not work. It went one day up, but then eventually it did not work. So then it automatically ignores that and takes the previous one. So that's an its own understanding. Okay. That's its own understanding of things. That this was an anticipation, did not work, then this is your final one. So latest one is what you will see here. This is the latest one, which is meaningful. Then let's see up this chart. And this is your higher low latest one. Tried 1, 2, 3 days, it went up 2, 3 days. So then, or it's just one day. Let's see how it goes. So this is a low. It compares this to this. Again, it's a higher low then. Just before the breakout, you have this higher low. So it does things automatically. Plus it takes care of all the minor things. Okay, long wicks. It automatically understands that this is something one-off. Let's say, for example, this one. And this is just before that 4th June big fall. So it will automatically understand that this is some one-off, and then it takes care of it automatically. Here. Okay, this is again, look up this. This is a big fall up here. And if we'll see up here, I think it should give a higher low itself. Let's see what it does. Okay, so it's giving a higher low. This was in anticipation one day candle, but this is a very big, so it automatically understood that this is something which is one-off, and accordingly then it compared it from here, ignoring that candle, ignoring the lowest point, and then just analyzing it by itself. Okay, it reads by itself based on different things, and then it gives you that. So this one is your fine. Now this may look that it's higher low in this again, but it moved here one day up, so it anticipated, it did not work. So now it compares this to this. So again, I will again repeat, what you have to look is this recent one. Okay, what's coming up here, that's useful. This before that, it can be in anticipation, may not have transitioned. Okay, so it automatically took care of this big candle, this big wick. It understands it and then gives you a higher low. Okay, so that you don't have to do anything. Let's see more. So let's see, you will see randomly somewhere. So it will randomly, let's see. So this is the last high low. Till yet it has not again recaptured the 10 one. Okay, it has not, so it doesn't know the next one. Once it moves up 10, then it can tell you. So this is a lower low now. It compares from here to here. Of course, the AI also doesn't know the low, right? How will it know the low? Until and unless you see some upside movement, then only you can know the no. So here you see some upside movements on. After that only it comes to know that okay, this was the lowest point to compare with the previous lowest one. So this is a lower low. You can just see up here. Let's see what was this. Okay, so it's a very tight low. Okay, almost same. So sometimes you'll have to use the judgment when it's very close cases. So the accuracy of this, as it's like in AI, it's just in a running phase. Maybe in future it gets more better. So this accuracy is like 95%. 5% will have to use your mind. Okay, you can use your mind 5% of the time, and you can simply see that it's very close, almost just 0.5% here and there. So it's fine. This one is fine, still can be traded. Sometimes it's just too clean, sometimes it's a bit very close. So just take based on understanding your visual understanding, then can take this one. This is a higher low. Just taking this to this clean structure. Okay, of course it will not give you higher low if the chart is simply very less. Okay, if it doesn't have the data, it will not give you. It will show you to check it manually. Okay, see here it has given you to check manually because the data is just too less. It's just too less of a data for it to read it. Okay, so you then can see visually and manually at what's going on. You can see it's a lower low till yet. Okay, once it gets good amount of candles, then it reads it. Here it started reading it again, and it's get better as you have more and more data with it. Okay, so typically for IPO stock, you will have to use up your seed. Then as you have more and more data, it start picking it correctly. Okay, so for IPO stocks, you will have to do it manually itself. As it will move above 10, it will anticipate and then recorrect itself. So it moved up above 10, so it anticipated a higher low, but then it again went down. So it's again waiting for a low. So then this is a low. So it will compare this to this. So again, I will repeat for 8th time that you have to see the latest one. Okay. Once it has moved up above 10 here, you have to see what's the latest one which is coming. See here it worked fine. It's picking up the lows. Okay. Let's see full chart. Here it anticipation moved up and then it went very close. In anticipation and picked up, it went down. It's very close, 1 rupee kind of difference. So manually can judge it, or even if you leave, it's fine. There is always some other stock. You can lower the size if too much confusion. There's always ways to reduce up if any confusion is coming. Okay. Let's just keep seeing this full chart. See here it never went, it just moving up and up. So it's taking in that way. Here higher low, it this to this comparing. Again a higher low. Okay, here higher low, here higher low. Okay, too much analysis, too much replay we have done. So then trading you gives some error. Let's start again from there. Let's see here when it started transitioning. Some problem itself. some replay function error. But you can see here, then eventually it started. This is contraction, eventually broke up here. Okay, went down. So it changed its structure then. This was a very clean structure. Then it changed its structure, lower, tried up higher, here higher again, failed to break out, lower, just going down. This is the lowest point. Okay. Let's see some more Saxoft. Look up here. This moved up, and then this is which kind of base? This is an upright base. Okay, this is an going just up and on the right side like this. Okay, this went up here, kind of lower low up here. It spent here one day before this big breakout, so that's fine. 1 day, 2 day, 3 day, you need some kind of very tight right side. This is simply, so this is like this, going down slightly below, making a very tight, this is kind of an inside bar, and then moving. So it's a kind of mid kind of correction, not that great. If it would have spent 2-3 days, then it's comparatively easy to know. Okay, just 1-2 days can sometimes be tough, so it's then a personal call. Okay, just your own judgment. The reduced size can avoid in some other way. If there is some confusion, then can do. Okay, accordingly. Here just 1 day of sideways and then a breakout, so it's fine. But yeah, of course, here instead of a full 10% size, 12% of size can go, could have reduced it to 8%, 7%, 6.5. Okay, accordingly could have reduced, but it was not like this directly moving up from here like this. If this would have, this candle would, if this candle was not there, then it was a action in which nothing could have been done. If there is no this candle, this is up and directly up here, then we would have made for higher low to form and then trade maybe. Okay, so here good movement. Here it's trying to form a base. 1-2 day up, again failed, here failed, continuous failure in this. Let's see some more. Sport King. Let's see what was the structure up here. Okay, it's a higher low. Before this breakout, it's just spending some time up here. Okay, you see this area before breaking out. Okay, this is correction of this lower low. Okay, it gets corrected in this 3-4 days itself, and then you have this breakout. It's not like it went simply from here to here. That was a bad price action if it was like this, but instead it make a very tight right side. It corrected of this error in a very quick way. This is a very quick way of correcting a lower low. Okay, so 3-5 days in, so here it will come lower low only. We'll have to judge it manually. Okay, maybe in future it identifies that also in some way, but till then manually. Let's see, this is CI of this one here. Let's see on these days what was the structure on this day. So it's a higher low structure. Let's play it. Okay, it's a full higher low structure going on. Here also I think it would be higher low itself. No, it's a lower low up here. It's a lower low. Then it moves up here. Okay. Look up this one. I think it would have been a lower low here. Let's see. No, it's a higher low itself. So it would have been comparing with this. Not a very great single day breakout level. Your breakout level is here. It made a good contraction, then a very clean higher low moved. Transitioning to higher low uptrend. Look up here, it's a, let's see on this particular day. Okay, it's a lower low. Nothing this, now this is a breakout but a lower low. This is a breakout here, but it's on a lower low. Okay, it did not spend some time here. Directly 1 day, 2 day, 3 day went up. So it's not a right price action. It needs to get corrected. It corrected up here. Now it's a higher low. It's a correct structure now. And then let's see. So lower low, higher low come. Okay, it's just moving sideways. Here it picked up pace. So this was your latest here in that way. Okay. Let's see one more example and then we'll move ahead. Is this clear? Is this higher low concept clear? 2-3 ways I have told, some anomalies that will come, how to rectify them, and why. More importantly, why we need to do this. So look up here. So this is a breakout. This is a higher low clean. Okay. Let's see up here. A lower low simply. It made a higher low here, but moving up, trying moving up. Okay. Look at how good this one looked. This was the best visual that you can see up here. Gold at here on the upside. Your moving averages 50, 10, 20, 50 was there in line, everything. A clean, in this higher low, you see a clean contraction up here. The best. This is what we need on the right side. When in this full base, this is a full base, okay? That's what you need on the right side. A higher low and it's a good contraction. Okay. And then a breakout. That's a good breakout. Okay. It never formed another low. It's just moving up and up here. I think it can form now. Lower low. Here, lower low. Now see, it is again and again changing because it's just sideways, moving sideways. 1 day up, 1 day down, 1 day up, 1 day down. So either side it will pick, then it will understand it and change accordingly, whichever side it picks then. So now this is your low on this day. Now this is higher low here. For IPO stocks, I will again repeat, you have very less data, so it will give you to check manually. Let's say you are seeing up here. See, uptrend it has changed it to manually because there is no data. Higher low still it's saying no. It shows manually because there is no data. There is just 6 candles, so it cannot do anything. It has lack of data. Okay, uptrend also it has lack of data, higher low manually. So it gives you to check it manually. So then you just have to apply up the concepts. Okay, so is this clear? We have discussed tons of examples on this now.